morning, everyone, and welcome to today's webinar. I hope you're all staying well throughout this lockdown, and thank you again for joining us today. We have a really interesting topic for today's webinar with lots of helpful ideas and really good plans to help you in your business. So I'd like to kick things off with our thought for the day from Dwayne Johnson. Success isn't achieved overnight. It's when every day you get a little better than the day before. It all adds up. So there's no magic bullet for business success. It takes hard work. However, using the tools at your disposal can drive hugely rewarding improvements. It's not about making drastic changes all at once, but it's all about making small incremental changes, changing old habits to get a little bit better each day. I just want to throw in our usual disclaimer that the information in this educational webinar is general in nature and not a substitute for tailored advice specific for your particular circumstances. So today we're going to start by looking at this mindset called the power of one and how small changes can add up over time. Change isn't easy, so we'll look at having the courage to change. Then we'll take a deep dive into 3 essential tools and examples of these in action. Then we'll look at the next steps and the support we can offer. And finally, we'll wrap it up with a Q&A. So let's look at what we mean when we say small changes add up. This mindset is called the power of one. And if you improve by just 1% each day, after a year, you'll be a massive 38 times better off. So for example, if you increase your sales by 1% each day for a year, by the end of the year, you'll be selling 38 times more. And what would your business look like if you increase your sales by 38 times? Or let's say you're a builder, for example. Think about what your business would look like if you could consistently lift by 1%, or if you could reduce your costs by 1% continuously. So what this formula demonstrates is the long-term benefits of continuous improvement. And of course, it's unlikely that you will achieve 1% growth in sales or reduction in costs every day, but the point here is to illustrate the power of compounding growth. Even if you achieve 1% improvement each week, you will just double in just over 16 months. So it's all about making those continuous improvements. Now let's consider what happens if you don't make these changes. Let's say your competitors sharpen their game, or you fail to keep track of changes in technology, or you manage your team ineffectively because you're so busy and your sales start to reduce. This can have a huge impact on your business. And this shows what happens if your efficiency decreases or your costs increase unchecked. So again, your sales or production is unlikely to drop in a linear way like this, but the important point is that unless you make continuous improvements, your business performance is very likely to drop. So I'll just take you quickly through an example. So in here, you can see your profit before tax, $700,000 at the top right corner. What this slide shows is how you can apply the power of one to more than one component in your business. So first we have the price increase by 1%, which contributes to $40,000 as seen at the right-hand side. And next we have the volume increase and the cost of goods reduction and also overhead reduction. So it just shows you how different aspects of business you can apply this power of one rule and how it adds to your overall profit. So change is inevitable, and we all know this, right? But change isn't easy. Think about other businesses that haven't adopted change and what impact has been on them. Kodak became the poster child for companies who failed to react to their changing market. In 1976, Kodak had about 85% of market share, but they failed to adapt to change, and by 2003, their market share had gone down to about 15%. Kodak had actually developed the first digital camera as well, but they're worried about the effect of going digital would have on their sales of their original cameras, and the failure to accept the change from film to digital had a massive impact on their profitability. So today, most of us carry a camera in our pockets, on our phones, instantly uploading photos to social media. And by the way, Kodak actually released their first smartphone in 2017. So They basically accepted their fate and decided to take on these changes and move to digital, but they did this in 2017, so they were quite a bit late, and you might be in a similar situation. So the point here is that it is a lot better to adapt to these changes before it gets too late. So this is another good example. And at the height of its success, Blockbuster had over 9,000 stores worldwide. And this is another story of a business that had the opportunity to change, but didn't see the value in changing at the time. In 2000, when Netflix was starting out with a DVD mail rental service, they approached Blockbuster to discuss Netflix handling Blockbuster's online business. But however, according to Forbes, they were laughed out of the room. And now Netflix has over 150 million users, whereas Blockbuster has only one remaining store. So you can see clearly how not adapting to these changes in a timely fashion can have a huge impact on your business. So what those examples of disruption highlight is that change is not easy. And when we're riding the wave of success, it can be really hard to see the need for change. We all have inbuilt habits and behaviors that we repeat. And we also have so much going on in our lives that it's just really hard to do something different sometimes. So this is a formula for change, and it's a really good concept that will help you increase your ability to change. On the right-hand side, we have an R, and this stands for the resistance. This is what's stopping you from changing your behavior. This can come in three forms. It can be not having enough time or money, or you just don't see the benefit of changing your behavior. So you need to build up the left-hand side of the equation so that these variables are greater than your resistance. So on the left, we have the D, which stands for dissatisfaction with the status quo. It is important to understand the consequence of not changing your behavior. Just like we saw in the examples of Kodak and Blockbuster, what happens if you don't learn how to grow your business or improve profitability? Your profits may drop, especially with inflation. Your costs might go up, so therefore further reducing your profits. Or your competitors who might have made good changes might see their prices drop, leading to more competition and eventually resulting in less profit for you. So you might not be able to take that family holiday you planned, or you might have to get rid of some of your team members. So it is important to make sure you are improving your business and growing it in order to remain successful. Then we need to have a vision. What will your life look like if you do change your behavior? And what do you want your future to look like? Is it more holidays or more money, or is it more time with your family? Having a clear vision will help drive you to change your behavior. And finally, we have what are the steps, the first steps you need to take in order to achieve that vision. And that's what the F stands for. The fact that you're here today means you're open to change. So that's a great step in the right direction. The three essential tools I'm going to show you now are the first steps you need to take to start moving towards your vision. As you'll see from this formula, your resistance to change has to be outweighed by your dissatisfaction with the status quo and your vision of a positive future. So these are the three essential tools: an annual business plan, an annual forecast, and ongoing reporting with accountability. Your business plan is your guiding document to deliver the business outcomes you want and the goals you want to achieve. Your annual forecast shows you the numbers you need to achieve in order to achieve your desired business outcomes. And the ongoing reporting with accountability means regular monitoring your results and having someone hold you accountable for completing your actions and achieving your goals. So let's take a closer look at each one of those, starting with the business plan. So there's a lot of components you can have in your business plan, and you can find a lot of choices on the internet, but we've put together a few that we think are really important and necessary to include in the business plan. So the first is a clear purpose, and this should be a 5 to 7 word statement that explains why your business exists for your customers. Second, you have a clearly articulated vision. What will your business look like in 5 years' time? And what are the long-term goals? Having a vision is really, really important for growth and also continued success. We see a lot of businesses that are successful, but don't really have a good vision and a plan for future ahead. And what this does is that it simply stops you from growing or moving in the right direction. Next, we have a high-level budget, and this helps you identify your gross revenue targets for the year. And the budget also forms the basis for the essential tool number 2. We have our key performance indicators, and these are things to measure that will make sure you're on track to achieve your goals. For example, sales per day or gross profit, or even the number of days team members are achieving their individual goals. Choose a maximum of 5 and make sure you can measure them. So once you got that, you have your opportunities and vulnerabilities. So this section highlights all the opportunities that you can maximize in order to achieve your goals, and how can you mitigate the vulnerabilities. And finally, you have the goals for the year. You want to make sure the goals are measurable and achievable, and they should be put into a 90-day goals with clear actions and a person responsible for each action. So it's important to review your business plan quite often and regularly to ensure the actions are being completed by the due date, and also to update your 90-day goals each quarter. So these are some of the rules we follow when it comes to developing a business plan. Firstly, all key decision makers should be involved and complete the pre-work before the planning session, just to reflect and prepare and to be heard. Secondly, your business plan should be on one page, double-sided. There's really no point developing a 30-page business plan to just gather dust in a drawer. It needs to be visible at all times, and it should be used to guide decision-making. Another rule is share your plan with your team. Even if you remove some of your sensitive information, it's a really good idea to share this with your team, show them what your vision is, your purpose is. And what this does is it just encourages your team to buy into your vision and align their goals with yours. So it's really important you do that. You can also report against your plan monthly to monitor progress. And this is also important to make sure you're on the right track towards meeting these goals. You can review and update your goals and actions each quarter to ensure you want to suit your goals with what you really want. So you want to do a full review and update of your business plan each year. Some things such as your vision and your values may not really need any change, but take this time to review some of the other sections like your KPIs and your budget and things like that. So let's look at this business plan and what it looks like. All components are clearly identified. We like to keep things simple and easy to read and understand. We've got the purpose, the vision, what we want to achieve, and the value section at the top. Then we have our high-level budget. We update the year-to-date column each quarter to ensure we're on track. Then we have the KPIs we'll be measuring. You can see we've added targets for our KPIs, so we know what we're aiming for, and our ideal client and value propositions are clearly identified. And again, it's a really good idea to share this with the team so that they know what the goals are and the targets are and know what they need to work towards. We then have our opportunities and vulnerabilities, and then we've identified our most critical challenge. And on the back page, we record our goals and actions. So this is the second page of the business plan, your 90-day action plan. First, we determine your annual goals and then break each goal down into 90-day goals. And each of these goals should be a step towards achieving your annual goal. We then work out the actions you must take in order to achieve these goals. And then we record who is responsible for each action and the due date. This is essential to make sure someone is accountable. So we recommend setting 3 to 5 goals for the year, maybe. And this ensures that they're achievable and you have time to focus on each goal instead of getting too overwhelmed by all these different goals. So that's the first tool, your annual business plan. So let's take a look at the next tool, your annual forecast. In the past, you might have prepared a forecast because the bank asked you for one or something like that, but an annual forecast is something that should happen each year. If you do not know how much money will be coming in and out of your business and when, you won't be able to make informed decisions. So Even if your business has a positive cash flow, you should really prepare a forecast each year, as it can possibly help you unlock a lot of cash just by making a few changes or adjustments. And your annual forecast will also break your high-level budget from your business plan into monthly targets, and accounting for seasonality and allowing you to predict and prepare for large cash outflows. So these are the three types of forecasts, which we can combine into something called a three-bear forecast. The first is your profit and loss forecast, which shows you whether you're going to make a profit or loss each month. And it gives you the flexibility to allow for seasonal fluctuations instead of lumping all income and expenditure into one annual total. It could show that while some months you may make a loss, overall you will still make a profit, and your losses in those months could maybe just because of timing issues of your expense. So what's really important to understand is that profit and cash flow are not the same. Some costs don't appear in profit and loss forecasts, so you need to make sure that you're going to make sufficient profit to cover the additional costs. And that brings me to the cash flow forecast. The cash flow forecast shows all movements of cash in and out of your business on a month-by-month basis, and it allows for tax payments or purchase of assets, drawings, and loan drawdowns and repayments. While the profit and loss forecast shows you your business efficiency, the cash flow forecast shows you whether you have enough cash to survive and thrive. As we all know, cash is oxygen for the business after all, and this is again important. We see a lot of businesses that are successful and profitable at the end of the year, but they struggle to pay their bills on time or struggle to be able to afford their purchases. And if you are having struggles like this, then it is very likely that you are having cash flow issues, and it would be really helpful to do a cash flow forecast to show you how much money you need each month and how you could maybe free up some extra cash if you can't afford to pay your bills on time and things like that. And the last forecast is your balance sheet forecast, which shows you whether the overall value of your business or the net worth of your business is going up or is going down, or if it's staying the same. It measures your assets, liabilities, and equity, and shows you whether you're solvent or insolvent. Highly profitable companies can, and they do go broke. So balance sheet forecasts give you an early warning of risk. For example, if you have a huge increase in sales, but you're slow at collecting your debtors, you could be in a position where you can't pay your bills as they fall due. And as you can see, the forecast tells you a lot about the health of your business, and that's why it's one of the three essential tools. And that's why you must do it annually, if not quarterly or monthly, rather than only on the request of bank. But yeah, we do highly recommend our clients to prepare forecasts on an annual basis, as it's just so important and makes such a huge impact on your business. So here are some of the rules for developing your annual forecast. There's plenty of software out there to help you create your forecast, but it's a good idea to do it yourself, or at least try to do as much as you can yourself. Xero has a lot of good apps that we can recommend to help you do it as well. And we send our clients pre-work to complete before we prepare their forecast, just to ensure they've identified all expected income and expenses. Next, you want to start with your desired profit, maybe your target profit, then work backwards to calculate the sales you need to achieve that profit, and compare this to your results last year. Is your desired profit realistic and achievable? Review your figures and make any required adjustments. And of course, we can help you and develop your forecast and identify areas you can improve in cash flow. So that brings us at the end of the annual forecast. We'll look at the next essential tool, which is ongoing reporting with accountability. Reporting means regularly monitoring your results to ensure you're on track to achieve your goals. And if you're not measuring your financial results and the key drivers of your business, you can't properly manage them. Technology can provide you with real-time data to support informed decision-making. So you want to compare real-time data against your forecast and make adjustments if required to stay on track to achieve your goals. We recommend preparing management reports monthly to measure your key performance indicators, because if you wait until the end of the year to review your annual accounts, the data that you use can be a bit too old. By producing regular reports, you can quickly respond to any unexpected changes in your results. So, and of course, without some accountability, you're less likely to take the actions you need in response to your reports. And people often start with really great intentions, producing reports for the first couple of months, but then they get busy with their day-to-day tasks, and having an accountability coach will ensure you dedicate time to review your numbers and check that you've taken the actions you need to. Accountability helps you to set aside time to work on your business and also complete the actions that you've set out in your business plan and the goals, or to respond to your regular reports and building better habits for your business. Your accountability coach should be someone independent, and they must have the backbone to give you consequences for your inaction, but also have the heart to care. They can't be afraid to upset you when you need a dose of accountability, and they need to care about you achieving the goals you've set. You must also have clearly documented actions with due dates to ensure you have a deadline to work towards. There must be consequences for an action, so if you keep failing to complete your actions, something is broken, and it's likely that you may have the wrong person holding you to account. So it is important to have an accountability coach who would actually hold you accountable for your actions. So my aim today is to help you to take this message and implement some positive changes in your business. So here's some of the next steps you can take from here. As we all know, doing nothing is not an option. And doing what you have always done is unlikely to give you the same results as you've had in the past. So one of your next steps could be to make a plan that you can create that's clear and you can articulate to your team. You can develop your forecast for the year and repeat this maybe annually. Next, you can find someone to hold you accountable, and you can focus on what you can do as opposed to worrying about what is out of your control. And finally, we're always here to help if you need help from us or any kind of support. So please feel free to reach out if you do need some type of support. As I mentioned earlier, the information in this webinar is really general in nature and not a substitute for tailored advice specific to your circumstances. But there are several ways that we can help you more specifically beyond today's webinar. We can help you implement the 3 essential tools in your business through a business planning session or by preparing a forecast for you. And for those who need accountability to make changes and achieve your goals, we offer quarterly coaching sessions where we update your 90-day goals and actions and hold you accountable to achieve them. Or we also offer monthly coaching if you need more regular accountability. We are registered service providers, so you might even be able to apply and receive funding from the government for some of these services. So if you'd like to find out more about that and about our services, please get in touch, and we'd love to help you in any way we can. We do a lot of business plans for our clients, and it's the type of work that we really enjoy doing with our clients, as it's such an essential part. And it's very interesting to see the impact and changes resulting from that business plan that we've created, and having your goals and vision and all your KPIs and things like that just written down. It's really helpful, and it's really good to see the huge impact it has on clients and their business. So that brings us to the end of the session. We'll answer our questions now. So if you have any questions, please feel free to leave them in the chat box, and we'll try to get through all of them.
Okay, doesn't look like we have any questions. Alan, was there anything else that you wanted to add to the webinar?
If there's no more questions, I'd just like to talk about this parting quote really quick before we boost off. So action is the foundation key to all success. I recommend to commit to at least 3 actions you will take as a result of today's webinar, and make sure you write them down and give each of them an owner and a completion date. And remember, if you need our support, we're here for you. Thank you again, everyone, for making the time to attend this webinar. We appreciate that your time is very valuable, and it'd be really awesome if you could complete the brief exit survey following the session so we can continuously improve and get your feedback on what other webinar topics you'd like to see from us. We hope we've given you plenty of ideas to ponder and some clear next steps for you and your business. And please get in touch if you would like our support. On that note, I'll end this webinar. Thank you and have a nice day.